So welcome to this print exclusive webinar that we have for our subscribers. It's on cryptocurrencies. Are they safe, secure, and still the future? We have an exciting panel for you. We've got Amanjot Malhotra, who's the country head India at Bite. We have Anuj Gupta, who's a chartered accountant and a consultant at Quagmire Consulting. We have Meena Venkatesh, who's also a chartered accountant and a certified blockchain expert. And we have Neha Nagar, who's a finfluencer, which, by the way, I love that term. And she's the founder of Taxation Help. Now, we still are going to wait just a bit to start because we're waiting for more subscribers to join. But I just want to welcome all of you. Thank you all for being here. Thank you to the subscribers as well for joining. And if you have any questions, keep messaging them in the chat box and we'll take them up. And for the panelists, the way that I'd like to conduct this is that we already have a bunch of questions that have come in from people beforehand. So we'll use that to kind of guide the session. But through the session, we're going to get questions from the viewers. And so I'll intersperse our discussion with those questions, and I'll be aiming the questions at one of you. But if any of you want to step in, if you have some comments to make, please just let me know, and please go ahead with your comments. It's not going to be like a one-on-one Q&A, like I pick Neha and I ask her questions, and I pick Meena and I ask her questions. It's if Amanjot has something to say, if Anuj has something to say, then just please leap in. It's more formal, more an informal chat than formal discussion. And as our viewers start joining, we will kind of fully take it on. Right now we've got just 3 people who've joined, but that's sure to grow in the next few minutes. There was quite a lot of interest in this, just given the number of questions that we got. There were something like 60 questions that we got on various topics, and I've had to condense them because a lot of them were similar questions. So the main kind of buckets of questions I can tell you now, like beforehand, one are general conceptual questions, which are like, how does crypto work? How's the value of Bitcoin determined? And things like that, like how did cryptocurrencies get so big, so popular? Those kind of conceptual questions. Then we go on to the elephant in the room, which is FTX, and what happened with FTX, and what are the ramifications that has for the Indian market, for cryptocurrencies in general globally. And that kind of leads on to the safety of cryptocurrencies as an investment destination. Like, should people still put their money in? There were a lot of questions regarding that. And then we go on to, the way that the government and the RBI is thinking about cryptocurrencies, what their attitude towards it has been, what it's likely to be now. And then a lot of people, of course, seeing the panelists that are here, they asked for investment advice. Now, of course, we're not going to go into buy this cryptocurrency, don't buy that cryptocurrency. That's not what we're here to do. And I don't think any of you want to go out on that limb and recommend specific products. But generally, I think people are interested about cryptocurrencies. Are they themselves a safe destination, as opposed to other places they can put their money, like, mutual fund or stocks or, equity and things like that. So we'll discuss that. And then there are a whole bunch of questions regarding the RBI's central bank digital currency, what it is, what it means. Is it the same as UPI? Will you be able to go to a shop and just scan and pay using a CBDC as you would, UPI? And then there are some that are forward-looking, like, what is your outlook? Like, what is the future of this type of, non-backed currency? One that is not backed by a sovereign or a central bank, like things like that. So these are the broad areas that we're going to touch upon. And as and when we get questions during the discussion, we will take those up as well. Does that sound good? Awesome. So yeah, we're still waiting. And for all the people who've joined, you're in the right place. If you want to hear about cryptocurrencies and what the future is for it, like first of all, what they are, like not what they are, but how do they derive their value and what is the outlook right now? I know a lot of you are concerned that the price of Bitcoin and other cryptocurrencies has fallen quite sharply. We've got a lovely panel of experts from across the board. They're going to explain all of these issues to you. So stay tuned. I mean, don't log off. We're just waiting for more people to join. And oh yeah, also wanted to say that I'm going to be reviewing the questions that you send on the message board, on the chat box. So please send those in. But I'm going to be reviewing them on my phone over here. So if you see me looking away, it's not because I'm getting bored or that I'm not paying attention. I'm in fact reading all of your questions and selecting which ones that we can ask. So I'm fully engaged. Don't think that I'm not. And yeah, that's it. We'll be ready to go quite soon. I know that it's a Friday night, and so even for the attendees and for the panelists both, thank you so much for joining us at this time. You must have given up some other plans to be here, and we appreciate it. And oh yeah, so we also have with us, I mean, you see her face. We have Vandana Menon, who's a senior writer here at The Print. And now this webinar actually was born out of a series of stories that we've been doing on cryptocurrencies. It was a little crypto series that we did. And Vandana wrote one of those stories, and it was an in-depth look at the growth of interest in cryptocurrencies, and especially she delved into how social media played a part and how it was also happening in tier 2 cities. And so she's here to kind of explain her story, kind of lend some insight into that phenomenon. And she won't be here through the call, through the webinar, but she'll be here just in time to give us her valuable insight. And that's it. So she's here, and we got our attendees. The numbers are going up, so it's paying off to wait. For all the new joinees, thank you for joining us. This is your The Print subscriber exclusive webinar on cryptocurrencies. Are they safe, secure, and still the future? We have our wonderful panel in front of us. They're here to answer your questions. Please send in your questions on the chat bot, on the message board, and we will address them as best as we can. So I think we'll start in 2 minutes, 8:05. We'll give people 2 more minutes to join, and then we can go on. Yes, indeed. More and more people are joining. This is very heartening to see. It's clearly because we have such a fantastic panel. I mean, all of you are well-known names, and you've clearly got a draw. People want to come and see you, want to come and listen to you. It's very nice to see, and we're very grateful that you took the time to be with us. So we also got a few questions on blockchain and whether there'd be applications for blockchain, apart from cryptocurrencies. But I felt that is an entire topic on its own. It's different. And so if we have time towards the end, we'll address that area. But right now, for the bulk of the webinar, let's focus on cryptocurrencies, because that's where people are putting their money, and it's absolutely imperative that they get the best kind of information, the the best kind of advice on where they should put the money and how much, because I think that's also an issue that we need to talk about. There are a lot of people who we see stories in the news where they're putting all of their money in cryptocurrencies and then they end up losing all of it. And some advice from all of you experts here, that maybe don't put so much money, maybe put only what you can afford to lose, that kind of thing. And so yeah, it's 8:05. I think we can start. We've got quite a few people who have already joined. So welcome to this webinar. It's an exclusive webinar by The Print for its subscribers. It's on cryptocurrencies. Are they safe, secure, and still the future? We have a panel of real experts with us from across the field. We have Mr. Amanjot Malhotra, who is the country head India for BITE. We have Anuj Gupta, who's a chartered accountant and who's also a consultant at Quagmire Consulting. We have Meena Venkatesh, who's also a chartered accountant and is a certified blockchain expert, which of course, comes in very handy in a discussion like this. And we have Neha Nagar, who's an influencer on finance, and who's also the founder of Taxation Help. So first of all, welcome to all of our panelists. Thank you for joining us. And welcome to all of our attendees. Thank you for doing this. Thank you for being subscribers. We won't be able to do things like this, these webinars for you, stories, in-depth stories. Thank you so much for joining us. So now, while we start, there's a lot of interest in cryptocurrencies that we are seeing. It's clear from the number of questions that were already sent in by all of our attendees and all those who couldn't join us right now, who might join in just a little bit. And so I think we should start with the very basic question, which I will ask Amanjot to answer, which is how do cryptocurrencies get their value? Like, who determines the value? It's not a central bank. So who does it?
So I think, first of all, let's not use the word cryptocurrencies. Instead, I would like to use the word tokenization. But the best way to call it is like digital assets. Like, this is how I look at the whole sector. And if you look at the US market also, they don't call it cryptocurrencies. They like to, regulate it like assets, digital assets. And regarding your question, the value, how it's determined is, it's basically the utility that it adds to the blockchain or to the entity it's being represented in. So there are multiple things. There are centralized organizations, there are blockchains, there are decentralized applications as well. So depending upon what kind of application it is, it's basically a way to incentivize that application or the network. So it represents some kind of participation in the network, and it is required because so when we say digital assets, it's required because we are working in a decentralized world. The main reason why we have cryptocurrencies or digital assets is because we want to decentralize. We want to, decentralize the control of a centralized entity into multiple stakeholders, so that the decision making is more direct and transparent and secure. So that's the main reason. That's why we have this kind of a network which is driven by cryptocurrency. So it's more like a utility or a token to participate in the actions which are required to propagate a blockchain network or a decentralized application.
Right. But I mean, if we just kind of make it really simple, how is the value of, say, Bitcoin determined? How would you do that?
It's determined by the market itself. So when it started, if you look at, if people have gone through the white paper, it actually started with like a particular number, and then it started changing as per the market sentiment. And it's have gone through its boom and bust. There have been multiple cycles. I think 4 to 5 cycles have been there. And then the valuation has changed over the past 10 years now, more than 10 years. So it's the beauty of it is that, it is determined by the market itself. No single entity is kind of driving the price of Bitcoin. Let's say a central entity holds a lot of Bitcoins and they sell it off in the market. Then as the network has grown a lot, it can absorb that effect. initially it used to be like a dump and almost touched zero, but then the other part of the network was always there to bounce back and the price was stabilized. So, and I would just like to add to that, probably in the next 5 to 10 years, when more and more people have Bitcoin wallets and they hold Bitcoin and they're buying and selling, there's more volume in the market, the price will actually stabilize. So when we say that it's a wild west, like in terms of crypto, it won't remain wild west. It will be more regulated, it will be more stable, and the volatility will go down. And that's where I think a lot of utility will come in and a lot of stability will come in the market, and more people will find it's a kind of a good place to invest their money in.
Okay, so something you mentioned, which is that the increase in like users has led to also an increase in the value of cryptocurrencies like Bitcoin. So Meena, I wanted to ask you, you run these training courses, also you teach people about blockchain and cryptocurrencies. So what's the kind of interest that you're seeing within India, and from where in India do you see? Is it only urban, or is it outside of urban areas as well?
Okay, so coming to the like the prices part, like it's all about the demand and supply that determines the prices. So whether it is crypto or stock market or any other market, the price has the correlation between demand and supply. So coming to demand and relating the question that you asked, Sharad, so it's all about how people believe in the technology. So when I was teaching as part of crypto training, I realized that more and more people are interested to invest in cryptocurrency. Though there is a risk factor that is associated with cryptocurrency because of the volatility. And first of all, it is a decentralized currency. And in India, we no longer term it as a currency because it is a capital investment. And it is not a legal tender as well. Because it is not accepted as a mode of payment, except for few countries who are accepting one or two, which is El Salvador and Central African Republic. But coming to the Indian government, because of the regulations in picture, I think people are restricting themselves to invest more because of 30% taxation. So I think though people are interested in order to invest in cryptocurrency, I think the regulation part is stopping them a bit. I think once we get more clarity in terms of taxation, we will find more people coming, but still there are people who are trading and investing in cryptocurrencies.
Okay, and this is again in the metros, or are you seeing it also?
It is across India. There's I don't see the differentiation between because we have YouTube now, we have so many social media platforms where we can access the education, or where we can access the information about cryptocurrencies. I see that tier 2 and tier 3 cities are even interested in terms of cryptos. It's not only about the metro cities.
Right. And so now this is a great note for me to introduce all of you to Vandana Menon, who's a senior writer at The Print. Now, the concept of this webinar came about because we did a series of stories on cryptocurrencies, one of which Vandana wrote. And she wrote about the increasing interest in cryptocurrencies due to social media, and also how it's happening outside of the metros. So, Vandana, could you just tell us a little bit more about what you found and explain to us?
Sure. Hi, I'm Vandana. Thanks for joining us tonight, and thanks for subscribing to The Print. So I was one of the writers who reported on this series, this feature series that we did called Tracking Cryptonomy. And as a citizen of the internet, I'm interested in like these cultural rules that seem to kind of come with crypto. And, you know, it's often stereotyped as something that is meant for tech bros and like men in suits sitting in like Mumbai, Gurgaon, Bangalore. So when WazirX, the platform, posted that they've, you know, noticed a massive spike, I think 65% increase in signups, especially from women in tier 2 and tier 3 cities, that immediately signaled to me that not only do women in smaller towns in India have money that they can kind of set aside, but also there is mobility and there's like an aspiration to kind of learn more about the market. And so that was like the into this. And I spent some time while reporting on it. I spoke to women from all across India, Lucknow, Ludhiana, Ambala, Nagarcoil. And it was just so interesting that, you know, there were people who were actively investing and trading. And what I learned while reporting is that one of the most attractive things about digital assets is that the market stays open 24/7, which allows women to kind of log in and participate when they have the time to do that. So, I spoke to mothers who have 1-year-old children, but, after dinner, putting their kids to bed, like open their laptops and like immediately like delve into this world or like learn from people like me now. So it was really fascinating that, it's not just men, and that there are people who are interested in this. The other thing that I learned while reporting is that, yes, crypto is decentralized and allows much more like democratic movement, but more than that, it gives people in small towns in India this feeling of like financial dignity and financial independence. And that was really like fascinating for me because it kind of puts a woman in a smaller town on the same equal footing. One of the people that I spoke to is a trader in Bangalore, and she'd gotten her aunt to invest and buy cryptocurrencies. And her aunt is like 50 years old and lives in Nagarcoil. But when she would meet people in bigger cities, this was like a way for her to kind of feel more confident and talk about her digital literacy as well as her financial literacy. So it's super interesting. But like you mentioned before, I think the regulation aspect is kind of scaring people from participating fully. So I'm curious to see how the crypto landscape in India changes as we figure things out. So I really enjoyed working on it, and I'm still interested in like the fact that Elon Musk can tweet something and the entire market just changes. But it was a super fun piece to work on.
Thanks a lot, Vandana. And we won't keep you for longer. I'm sure you have lots of stories to file. So, I mean, you can go ahead and work. But so now something that she said really interested me in particular, and this is to Neha. You have so many followers that I've seen on social media. Do you see that there is a lot of interest amongst women, especially in crypto? And Meena as well, if you have any inputs on this.
Hi, thank you so much for inviting me, first of all. And as far as I can talk about women, I think in the last 2 years, interest of men and women, even children, have risen in financial assets, not just crypto. And if you talk about my audience, in my audience, only 20% are women. So I'm not sure. In my audience, even if on all YouTubers, I've asked multiple YouTubers that how much percentage of your audience is women. So it is just 20%. And we were talking about areas also. So even tier 2, tier 3 cities is about only 60 to 70%. In YouTube, different platforms have different demographics. Like on YouTube, you will find more tier 2, tier 3 audience, but on Instagram, you will find more tier 1 and tier 2 audience only. So I can't commit on the women part, but whenever I go in public, so there are 50-50. Like women also come to me and ask about crypto and the latest updates, whether they should invest or not, whether they should, hold their holdings or sell it. So if you talk about in physical, whenever I visit any college or recently I went to Rajasthan Fest, so in Jodhpur. So that was a tier 2 city, but there also they were more than 50-60% were women only, students, college students, and salaried women's. So yeah, they were asking about crypto also. And this is
That's fantastic to see. Meena, did you have something to add?
Yeah, just to add on to what Neha was speaking about. So since I was exclusively training women, so I just got to know from them that they are very much interested, first of all, in cryptocurrency. And I know one of my students who was just into P2P, buying and selling of USDT, and she was very much comfortable in making some money. So she's a mother of 2 children, and she was very happy about involving not directly in crypto, so but through buying and selling through USDT. So I think there are a lot of opportunities for women to even explore in crypto. It's not just about being a trader or being an investor. So you can also get a lot of job openings in terms of being part of the crypto companies who are into blockchain development, Web3, metaverse, so on and so forth. So yeah.
Well, that's very, very interesting. Now,
Yeah,
I want to like,
Sharad, I just wanted to add one point. I think Neha
please.
touched on data, which is the distribution of men and women on her channel. I think that's the case with almost every channel, almost like to a certain extent, because the ratio is consistent with YouTube. So if you look at the audience of YouTube, it's predominantly men, and women are 20%, and then
That's a
that
great
varies
point.
for the
Yeah.
extent. Yeah. On the other hand, like regarding the women that I've encountered in the system, that like I can divide into two parts. One section is whosoever is invested there, they've taken calls either with the help of their family members who have already invested, or they've taken calls with their colleagues. And most of them were really unhappy with the decisions that they've taken, because it was not their own decision in a way, and they kind of ended up making losses. The other side is women who are working in the blockchain space. They're making money. I've seen traders, I've seen artists. They're receiving payments from different countries in Ethereum or Bitcoin, and they're kind of cashing out in India. So that's the other part of it. So it's a big story which is playing out in the ecosystem.
That's great to see. And that actually then brings us back to some conceptual questions. So now, Anuj, could you explain to us, some a user has asked us, and I think this is an important concept that we make clear, that if we use a crypto asset right now in India to transact, first of all, can we do it? And second, if we do it, it's more like a barter transaction, right? Because since it's not a currency, it's more like a barter.
First of all, hi Sharad, thanks for having me on the panel. Yeah, like adding to all the things, yes, we do have a woman in all like the crypto club, and we do have a minor children also, like who are devoting and who are participating in the hackathon that are being doing pan India in the Bangalore, and we can see a hackathon in every part of the India. And I have seen that many of the minors are also participating. The children of 13, 14 till 17 years of age are participating, and they are getting very huge response from the sponsor, and like they are like getting into the space. And like moving back to the original question of yours, like if yes, it is being allowed to transact in cryptocurrency, but it is being allowed to trade. In the budget 2022, our government has said that it is the virtual digital asset.
Right.
So if we are doing the barter transaction, so that will not be allowed till yet as a, like I would say, legitimately. But people are doing it that we can do like a chai wala or accepting a crypto transactions, doing it that way. That is why they have introduced the CBDC in place of that.
Yeah. And we'll get to CBDCs a little later in the conversation.
So like if you are saying that if we want to like sending abroad any kind of a cryptocurrency seamlessly, and so that is a concept behind introducing a cryptocurrency, the decentralized way. But the thing is that to track all the transactions on a global level, that who is the custodian, that is why we need a global, I would say, global centralization and the global coordination between the countries, that a data can be prepared so that I would say black money that can be procured. Because the main reason why it is being demotivated by the Indian government is like they want to prevent the black money or the money laundering thing.
Yeah.
So no one has the data that who has. So that is the essence of the decentralized, and that is I would say the con of a decentralization also.
Right. Okay. And so again, the government's attitude and how the RBI is looking at cryptocurrencies, crypto assets, digital assets, whatever you want to term them, all of that we will come to just shortly. I want to discuss the big elephant in the room right now, which is FTX and what it has done to crypto prices worldwide, what happened there, whether it has ramifications for India. So Amanjot, if you could please lead this discussion on that. What happened there, and is India at risk?
Sure. Actually, FTX is not a single out event. FTX is basically a chain of events which happened earlier, and it has majority to do with the monetary policies that we've been following in the past 3 years. Like when COVID happened, we started printing more money. All the governments, they started giving out these dollars and rupees to everyone to spend. And when we did that, then we kind of pushed inflation into market. And then because of that money, some portion of it actually started, going towards the stock market and the cryptocurrency. That's why we saw that $68,000 mark of Bitcoin price, because there was so much money in the market, there was so much credit in the market. That was the main reason why that happened. And once prices of commodities and products started going up, and we started seeing a lot of inflation, then these central banks started pulling or sucking back the money. And because of that, once that starts happening and we see job losses and we see budget cuts, if you look at this, then the first companies that got hit was basically these advertising companies. And if you look at Facebook, Google, and all these companies, these are basically run by ad revenue. And what happens is that once you start pulling back money out of the market, the companies which are basically paying these companies to run their advertisements on the platform, they stopped running those advertisements. And then that's why we saw a big crash in the US market, especially in the tech stocks. So that was the main reason behind it. And if you look at it parallelly, you saw a lot of money flowing out of the crypto market. That's why we saw a big dump in the crypto markets. And when that happened, now this is basically the monetary policies and its effects on stock market and crypto markets in general. But if I talk about to specific events, then you see that we saw a lot of bankruptcies in the last 1 year. The reason was that these cryptocurrencies were these crypto companies were taking out money, and they were kind of promising yields. We have a concept of staking, we have a concept of yield, we have flexible yields, we have multiple financial products in the crypto ecosystem, which are way different from the stock market or any other banking product. The staking is kind of similar to the fixed deposit that we have in bank, but if we talk about other products, then they were kind of offering yields of 10%, 12%, sometimes it was upwards of 80%, but for a very short period of time.
Now, do you think that these are realistic? These numbers that they were offering? I mean, this also is for all of our viewers. I mean, should they go for companies that offer such high yields, do you think?
The simple concept is that higher the risk, higher the reward. And if you're looking for rewards, then you're taking very, very high risk. And I gave you a number of 80%, that does not, in general, that does not last for more than a month or 2 months or 3 months. These kind of rewards just come they come down very quickly, because the reason why companies do it is because they want to push a new project or a token in the market, and they want to get acceptance and more people jumping into it. But the problem with this kind of concept is that some portion of the companies do not have good intentions, and they kind of exit the company, and then it's basically up to the users, and they are holding tokens which are basically useless. So we should be wary of all these companies and all these schemes in the financial market, specifically in the crypto. So yeah, we should be very careful about it. I think we should think it from this perspective. What's our risk appetite? And the other thing is, which I feel like people do not think about it, is how much time and investment are we going to do it in terms of our own self? Because most of the markets right now is that we invested and we just go back to our work, because we all have jobs. That's why the most common recommended financial product is the SIPs that we have in mutual funds, because you don't have to manage the money. But if you're investing in cryptocurrencies and expecting and rewards of north of 50%, 60%, then you have to be actively involved into it. You have to actively go through Twitter feeds and see that what's happening with the company. And you can see a company can go bankrupt with a single tweet. That's the power of social media.
Correct.
So coming back, it's basically FTX is basically the biggest bankruptcy case, biggest clog in the chain of events that happened in the past 1 year. We had Celsius, Voyager, BlockFi. BlockFi actually happened after FTX, and multiple. I think in India we have Volt, which kind of got investment from international investors, and they stopped the withdrawals also. I think they're still working out on things. So the point is that they took the user funds and they used those funds to invest into multiple schemes. And when those schemes got bust, those funds got stuck, and then they started filing the bankruptcies. But the problem here is that you can't or you can or you cannot. I can't comment on that, but if you're doing that, then you need to inform your users that you're actually exposed to these risks.
Yeah.
Right. So that's something which was missing in the whole last 1 year of bankruptcies. I think a lot of people lost money in FTX. Celsius actually seemed like a very trustable company globally till the time it got bust. Same goes with FTX. It was just within a day, everything was shut down.
But then that's true for even Lehman Brothers.
Yes.
I mean, you're trusted until you're not.
Yes.
It's so now Neha and Meena. First, Neha. This brings us to the question of the day, which is: are cryptocurrencies still a safe source for your money? And how does one ensure that your money is safe in cryptos?
As we are talking about FTX, so this is not the first exchange which has went into bankruptcy in crypto case. There was an exchange called Mount Gox. I don't know if I'm pronouncing it right.
Correct.
In 2013. So at that time also crypto went down to 50 to 60%. Then again, there was another crypto exchange of Canada, largest exchange in Canada, and it went into bankruptcy in 2017, and at that time also 50% पूरा crypto नीचे आ गया था. So this is not the very first time कि कोई exchange आया, and maybe next week कोई बड़ा ही exchange हो. अभी कुछ न्यूज आ रही है कि बाइनेंस ने जो अपना कस्टडी का प्रूफ दिखाया है, जो ऑडिट कराया है, मे बी इट इज नॉट फेयर. मतलब they have paid the auditing company, or they haven't disclosed everything. They haven't disclosed everything in detail. So ऐसे और भी आगे हो सकते हैं, बहुत सारे exchanges fail हो सकते हैं. But again, crypto exchanges are not decentralized. These exchanges which are going into bankruptcy. So whenever you are investing in cryptos and picking an exchange, pick a decentralized exchange. Although whenever you are researching whether it is 100% decentralized, it will be difficult for you whether to find out that it is actually decentralized or not. But you have to do your own thorough research. So whatever happened in last 1 year is a warning for us to be more cautious and to do more research about cryptocurrencies with exchanges. Plus, this is highly recommended that whatever cryptocurrencies you are investing in, please hold them by yourself. Put them in your hard wallet. Don't deposit it with any exchange or with any companies. Be it an Indian company, be it in global exchange, number one, Coinbase, Binance, whatever name you take, there can be some situation they can go into bankruptcy. So hold your cryptocurrencies by yourself, and if you are depositing your cryptocurrency to a custodian, then please check out if it is licensed. There are many government which are giving license to custodians, and it is insured. It has to be insured. So many companies go for insurance for their custodies, and apart from it, you have to do the thorough research. What are their is it decentralized or not? So yeah, cryptocurrency, when we are talking about whether we should invest in cryptocurrencies, 2022, cryptocurrencies का जैसे भी ट्रैक रहा है ना, हर साल 50% फॉल हुई है. Take it 2011, 2012, 13, फिर 14 में फिर भी थोड़ा बहुत ठीक था. Then 2015 में फिर से क्रैश हुआ, 16 ठीक था, 17, 18 क्रैश हुआ, 19 ठीक था, 20 में भी जब पेंडेमिक का न्यूज आया था तब भी 50% क्रैश हुआ था. तो आई डोंट नो ये जो 60% का भी क्रैश आया हमारे पास, तो ये इतना बड़ा न्यूज है भी कि नहीं. बट न्यूज क्यों बना दिया गया या फिर हमें क्यों लग रहा है? बिकॉज देयर आर मोर पार्टिसिपेंट्स इन द मार्केट नाउ. Earlier, if there were only 1 crore or just few lakhs, like 50 lakh or 60 lakh from India, in 2021, it touched upon 10 crore. So there was a news that there are 10 crore crypto investors in India. जबकि स्टॉक मार्केट के 9 करोड़ and म्यूचुअल फंड के 12 करोड़ कंप्लीट हुए थे, बट क्रिप्टो में 10 करोड़ टच हुए थे, जितना भी एक्सचेंजेस ने अपना रिपोर्ट दिया था, Coinbase, CoinSwitch. So इसीलिए this is a big news कि 50% क्रैश कर गया. But when you see the history of Bitcoin and crypto market, it is very normal for the crypto market.
And
just add one thing to it.
Yeah.
Neha was talking about crashes. I remember I started when I started working with LCX, my previous organization, in 2018. There was a crash in 2019, and the bottom was at $3,400, $3,300 of Bitcoin at that time. And if you look at it, it's still 5 times higher than that. So we are calling it a crash, but I don't know, it's still 5 times. And it's just a 3-year-old news. I remember it profoundly in November, December in 2019 itself. So yeah, like it's all about perception. I would say that how we look at it. There was a point somebody paid bitcoins for pizza also.
Yes,
So,
remember that. Yeah. So, Meena, now could you give us some advice on, say what quantum, what percentage of your portfolio should be in cryptos? I mean, of course, we see a lot of reports of a lot of people putting large amounts of their savings into cryptos and then losing. But should they just treat it as one other investment instrument? Or should they see it as, oh, इसमें बहुत सारे returns आ रहे हैं, we're getting a lot of returns, so let me put more money there?
Yeah, I mean, so coming to the question that you asked, Sharad, I think it's not about the percentage that you should consider for investment. It is all about the risk appetite of one individual. Right. Personally, I feel that it is not advisable to invest 100% of your savings or the lifetime savings that you have in crypto. And because crypto is subject to risk and volatility in the market, so I think one should be aware of where they're putting their money in or where they're investing. If you're investing in a business which you're not aware of, then that is a risky investment, of course.
Okay.
So coming to the bifurcation, I completely feel that it is depending upon the risk appetite of an individual. So if you ask me, I might bifurcate based on my interest. So if I feel that, okay, there's future in crypto and I don't mind taking that risk. So there's a saying that invest only that money that you're ready to lose or you're affording to lose. Right. So I think one should be aware of the risk factors associated in an investment, do your own research. And a lot of them have got introduced to cryptocurrency only because of the tweet of Elon Musk, because that was a phase where when Dogecoin was in the, trending in the tweet, that everybody got introduced to crypto because of Elon Musk's tweet. Right. So I think people expect unexceptional returns in crypto. When they are expecting unexceptional returns from crypto, they should also be acceptable in terms of the correction that happens in the market. Like Neha also highlighted on the corrections that happens every 4 years. So Bitcoin halving is a phase where people will start investing more because of the limited supply that Bitcoin is going to get into. So I think every 4 years, this is the correction phase that one should accept before investing in crypto, and they should also be aware of where they're putting their money in.
Right. And so now we're about a month and a half away from the budget. And so Anuj, let's put on our policymaker caps and see that, say we are the ones who are coming up with the budget, and that you were tasked with coming up with the rules on cryptos. What would be your wish list? What do you think that they should do to encourage the market while keeping everybody safe?
Yeah. So coming to this one, I want to add one thing. Like, because of an FTX, we can see a proof of reserve that has to be like published by a lot of the exchanges. So that is a good thing that's happening in the market. That whatever the funds you have or what are the liabilities you have to show by the audited. Like Neha has just mentioned that Binance has sent some report, so that is a proof of reserve report, which in the market are saying that that has not been corrected, or they have like paid to the auditors for like the fake thing.
Yeah.
So with the FTX thing, like people are aware of like or the putting the pressure on the exchanges that they should show the proof of reserve report, that whatever they are due, they should have that amount of crypto assets along with them.
Right.
They shouldn't trade that. They shouldn't trade their money with the others. Like we have seen that Vault has done with the Celsius, Blogger, or the 3ACs. So when they fail, the domino impact has been come to the Vault.
I see.
So,
right.
The coming to the budget expectation is, first of all, the main demand is people demand is to allow to the setup of the losses. But
I see, in the 30% tax that they announced.
The 30% taxes, I would say that is also acceptable by the crypto holders or the crypto community. The main thing they are being hit is by the non-setting of the losses. So when we have the, I would say, when we have the profit in the Bitcoin or the loss in the Ether, so the government is not allowing to set it off.
Right.
So that is being a very big hit. So because we can see now in the last 1 year, people have gone through a very losses, and now they are just like, if you have a profit of 100 rupees and you have a loss of like a 30 rupees, then also you have to pay the taxes from your pocket, even you can set it off.
Yeah.
So that is the main thing that the government has to rethink, because because of that, the people are moving to the Dubai and the other countries, and the brain drain, we can see the brain drain is happening. We can see that a lot of the exchanges are closing their business in India, and they are not willing to register in India because of these compliance issues.
But as Amanjot had explained in the beginning, there are various different types of these digital assets. And so would it be, I mean, how complicated or simple would it be for the government to club all of these? Like, because Bitcoin is one thing, but Ether is something else entirely. So if you lose on Ether, to set that off against your gains on Bitcoin, is that something that the regulation can do easily? Should it do it at all?
So the thing is that like government has like put it off all the cryptocurrencies. They have like in the definition of under section 100 BBH, they have like put all that thing in a basket of the virtual digital asset. Likewise, you can say in the basket of a share. Now you have a Reliance, HDFC here. Now you have the Bitcoin, Ether. So in the parliament session also, they have like particularly said that if you have the profit in the Bitcoin, then you can't set it off against the loss of Ether, and that is like a below the belt health, because if people have the profit and the losses, if you want to encourage, at least you should allow the losses or the setup of the losses. So that is the main thing, that they should allow that the 30% or like the 30% or the VDA is still being acceptable by the crypto user.
Okay.
Also, the 1% TDS is not acceptable by traders.
Right. And there's no clarity, and like there's no clarity on the 1% TDS also. Like 1% TDS is imposed on the Indian exchanges, but there's no clarity on the foreign exchanges. Anyone, like after the filing of a return, the income tax officer can come and like hold your collar that you should pay the TDS on the 1% exchanges or the 20% TDS, because you don't have a PAN, like with whom you're trading. And there's the government has just introduced it without the SOPs or how to do that.
I thought the exchanges in India have been kind of self-regulating themselves, and they make it mandatory for you to give a PAN.
The thing is that
like they do that. Just I think that's a safeguarding tactic that they're doing. They're taking almost all the information, so that like, let's say 2 years down the line, 3 years down the line, the regulators come to them and they ask for the information. They're ready for that, so that because nobody wants to deal with the ED. Like the exchange just wants to work. They do their jobs. I think almost every one of us wants to do our job and not get into all these hassles. So that's why I think they're safeguarding themselves and self-regulating themselves.
Right.
And government has mandated to keep 5 years of data for the exchanges, for every user. But the problem here is that for the Indian exchanges, they can have the data, but the most of the people in the crypto world are not using the Indian exchanges. They are using the Binance, the KuCoin, or I would say the decentralized Trust Wallet, MetaMask wallet.
Yes.
And the basic thing is you don't able to know that with whom you're transacting. Then how you can deduct a TDS?
Of course. And so Neha, you also wanted to add something? Oh, sorry, we can't hear you.
So there is this organization called Bharat Web3 Association, जिसमें 9 exchanges है. So they have recommended to the government that the TDS should be 0.1% instead of 1%, because the trading volume has been decreased by 80% in last 6 months since 1st July.
Yes.
Oh, since the tax kicked in?
Yes.
Correct. So 80% decline आया investing में भी और trading में. So they are recommending कि the TDS has to be 0.1%. So TDS is the TDS is the biggest obstacle for investors or traders to start trading or investing in cryptocurrencies. So and apart from it, Nirmala Sitharaman, our finance minister, has done a meeting with US officials to how to regulate the crypto market. So maybe in Feb budget we will have some positive news from the government.
Hopefully, fingers crossed. But now the government, when it talks about the TDS, I remember her saying that that is the FM. She was saying that the TDS is mainly to track transactions. But now, if the exchanges are already collecting your PAN card, and the whole point of crypto assets being on the blockchain is that everything is transparent and trackable, is the TDS a useful idea, Neha?
I think government wants to cut down the number of traders also. They don't want people to trade or invest in cryptocurrencies. So I have watched many interviews of our FM. So they have said that it's their responsibility to safeguard investors, traders from losses. So these are this is the main reason they have introduced TDS 1% on all the transactions. So they don't want you to trade in cryptocurrencies.
Now, this is a fair requirement for our finance minister to have, that she safeguards the interests of most Indians. So do you think then that regulation is the way to go? That if they regulate it, come up with a set of rules, then that's an easier way for them to safeguard the interests of the people. Meena, if you want to jump in on this.
Yeah, so in terms of regulation, I feel that we shouldn't give tax burden to the individuals who wants to invest or trade. Because everybody was specifying in terms of 1% TDS. So as a trader, when you start trading, capturing that 1% becomes the first responsibility for you, right? Because you have to cover that 1%, and over and above that, you have to start working on making profits. So that's definitely a burden to a trader. I think in terms of TDS, definitely government has to take a call on that. And secondly, I think in terms of the startups in India, so like Anuj was specifying about startups moving to Dubai and other countries where it is tax friendly. Right. So I myself noticed this situation when I was part of Dubai Crypto Expo 2022. I found more than 40 startups, Indian startups, who have registered and operating from Dubai. And there was very few Indian startups who were part of the expo. And I was, astonished to see that they were very much happy about being and operating from Dubai, and because of the regulations or the restrictions that is being placed in India. So I think in terms of the support the Indian government has to give to the startups and also crypto exchanges, I think they should work on that. And also 30% taxation, I think the government should, rethink about it and try to reduce the percentage.
But now, Amanjot, the question then is, we all know what the government should do if it wants the crypto market to grow. Does it want the crypto market to grow?
Probably it wants to grow predominantly in the blockchain space. Does not want a lot of capital to flow out of the economy into the crypto space. Obviously, every country wants that. Nobody wants to devalue their currency unless you get benefits in other aspects. So I think that's the main thing. What I realize is that the stand that the finance minister has taken is just to put a pause on into it. Like if you look at, if we go back a couple of years, we were seeing advertisements in IPL.
Yeah.
लगा कर देखो कुछ भी होगा, ये हो सकता है, वो हो सकता है. It was more sounding like a betting kind of a thing, which is unfair for economy like India. In US, they're almost majority of the population is accustomed to stock markets. They're also accustomed to losing money into stock markets. So, but in India, very few people are invested in stock markets. They haven't experienced it yet. And if you expose them to crypto, then it is extremely bad. So I think the stand has been good in terms of prohibiting false promises to the audience. But if you look at the industry as such, they've kind of suffocated the industry in the country. And Meena was talking about Dubai Expo. I think almost every crypto company which has originated in India has an entity in Dubai, Singapore, SVG, Estonia, you name it, like Malta or whatever it is. They have an entity because you can't survive it. Because the people have to safeguard themselves in terms of operations. Like if you want to innovate, you need some kind of some degrees of freedom.
Right.
If you want to launch your utility token into the market, even if you're doing a decent job or a regulated job, you can't do it with the Indian entity, because tomorrow you will get into a hassle.
Yeah.
That's the thing. So I think it has to be like the government has to understand the industry first. I would just like to add one point, like we were talking about 1% TDS, 30% capital gains tax and everything. Just think about, you get an NFT as an airdrop. Okay.
Yeah. Right.
And the government is asking tax, you have to pay tax over it. But if there is no market value of that NFT, how are you going to pay
Then
tax?
what is 1% of X is unknowable, right?
Yeah, you cannot calculate that. That's the whole point. If there is no market value, how will you calculate that? So that's why I think it's hindering for people to do it. Let's say, I think the resolution is, whenever you're making profit, just pay tax to the government. Simple as that. Why are you actually making people who are losing money and learning hard
To pay
lessons
tax.
over it?
Yeah, I get it. So now, Anuj, this kind of leads us into, when we're talking about government regulation and things like that, it leads us quite seamlessly into the RBI's central bank digital currency. So now a lot of questions, we've already received a lot of questions from users, from subscribers, that how is a CBDC different from a private cryptocurrency? So if you could tell us.
I would say that is an attempt of like demotivating the private cryptocurrencies from the RBI. So
Really?
like, yeah. So the thing is that it is as similar to the UPI, but from the UPI, the money is deducting from your bank account. But
Yeah.
in the CBDC, you have they have running the pilot project. You have to have a wallet, and the money is going to deposit it into that private wallet of the CBDC e-rupee. And then when you scan it, your money is not going to be via bank. It is going to be via wallet. So the main difference is in the UPI and the CBDC, it is going to be via bank. The UPI hits the bank, but the CBDC hits your wallet, like your private wallet.
But like 1 rupee is equal to 1 CBDC. That's
right. And like we have seen the China also, that they have put an expiry date on their CBDC. Like we have heard the news 2 days before. That they have put an expiry date on their CBDC.
What does that mean? That means your money becomes worthless.
Right. After a certain period of time, your money is becoming worthless. So they have a concept that they want to encourage the people to spend, not to save. Although that is not going to be in India, because otherwise you can change in the government.
Then it's like a monthly demonetization that you're doing.
Right. Exactly. So that is not going to be happen. But I would say that there are many things that is happening around the CBDCs also. So they have introduced the CBDC to replace the to private cryptocurrencies. But we are not getting the concept that why it has been launched. I thought Amanjot can put a light, or any of the panel, like Neha and the Meena can put a light, that why there's a need of that. Because we have just seen a news in I would say in the today itself, that now we can send a UPI use the UPI for the foreign payments also, UPI line.
Right. Yes.
Right. So they are simultaneously doing the work on the UPI, and they're introducing the CBDC. So I don't know why the government is want to encourage the CBDC part of it.
So do any of the other panelists want to lend their insight? Amanjot?
Yeah, I can add value to that. So from my perspective, I would say that CBDCs are not cryptocurrencies. It's just that the government has kind of utilized the technology behind cryptocurrencies to launch their own currency. Put data on a blockchain instead of a centralized thing. Put data on a blockchain. But I still feel that it will not be accessible to you, me, or anyone else, because that's financial data which the government wants to keep it to themselves. And I would say the RBI wants to use that. I think the reason why they want to do it is because obviously the push towards lower and lower use of cash and reduce the dependence on cash. Because if you look at cash,
UPI is working so well, why would they come up with something as an alternative to UPI?
Yeah, I think it's the next level of UPI in a way. You can call it a UPI 2.0 or a 3.0, whatever the government is looking at it, with the use of a decentralized ledger. Right. And I I think there will be a lot of benefits in that way. They want to bring more and more people in the digital economy, in the formal economy. Let's say, the disbursements of welfare fund that we do to people who are below poverty line, that could be done with the help of that.
So direct benefit transfer through CBDCs.
Yeah, they can also kind of track money which is being lying vacant, or like it's basically, I think, facilitating monetary policies that the government wants to put in. Like we all know that you don't want cash to be lying in, you want cash to be flowing in the economy for the best of the economy. So it could be for that, it could be for preventing frauds, it could be for n number of benefits that the blockchain or the distributed ledger comes as a technology. But I think it has nothing to do with private currencies or cryptocurrencies, digital assets. Like those are separate entities. It's more to help government in terms of making the economy more robust and digitized, and looking forward to the future. Because if you look at it, it reduces a lot of burden in terms of operations of RBI and the government to manage the cash flow in the economy, right? Printing money and all these things, they take, and managing money also, like there is so much counterfeit money also out there. So that's why there are a lot of benefits of introducing a CBDC.
Absolutely. So now we are starting to run out of time a little bit. So I wanted to ask this question to each of you. We'll go one by one. We'll start with Meena. Just a forward-looking kind of thing, like what do you see as being your outlook for cryptos in the future? And, are they still safe? Do you see that their value is likely to rise in the future? And yeah, where do you see it going from here? Do you think that the government will come up with regulation?
Okay, so I personally feel that the value of cryptocurrencies will definitely rise in future. And coming to the regulation part, of course, I expect that Indian government is gonna come up with some positive regulations where people find it friendly to trade and invest in cryptos. Though we have CBDC, which has no relationship between the cryptocurrencies that is in place, because the concept of crypto is just to have a decentralized currency, which is not controlled by government or a banking institution.
And
the
if
concept,
it's a central bank, then it's not decentralized, of course.
Yeah, and even for holding CBDC in your wallet, it does not earn any interest. So even if you keep it in bank account, it is much better than holding it in a wallet. So I personally feel that crypto definitely has a future, and in terms of the technology involved, because we have the more upcoming days where people are relying on Internet of Things. So we will have a metaverse coming into place, Web3 coming into picture. So we have more and more startups coming into blockchain and technology. So I am positively looking forward in terms of growth in crypto.
That's great. And Neha, what do you think? Do you think that cryptos can survive while CBDCs are also out there, or is there no relation between them and cryptos will thrive?
I think government has launched CBDC just for the people who are using Bitcoin and they don't have banking services. Like there are certain cities or villages, tier 2, tier 3, they don't have banks, but they were doing transactions in Bitcoin. So government thought ki let's reach there to introduce our CBDC and they can use our digital currencies.
I see. Okay.
Yeah, so that can be one of the reasons why they have launched. And yes, apart from it, it is not a currency. Just like cryptocurrency, it is not decentralized. It will have complete control by the government. Government is planning the limit also. Like if you have this much, like 1 lakh or 2 lakh of digital currency, then you will have to disclose your PAN number also.
Yeah.
So it is completely like e-rupee. Completely e-rupee. It is not like Bitcoin or something else.
Except it's not earning interest.
Right. But of course, government is aiming that it can be used as store of value. Like like China has introduced expiry date to their currencies, but I don't think Indian government will do that because they want their e-rupee to be store of value, and they will control the price. But yes, apart from it, to sum up the session, I would say ki please choose your cryptocurrencies wisely wherever you are investing. check if they are centralized or not, because in today's market, when there are 10,000 of cryptocurrencies, only 1 or 2% are centralized actually. When you talk about 100% centralized cryptocurrencies, I can name only few, like Bitcoin, Ethereum, and 2 or more currencies. But
Right.
so you have to pick, whenever you are investing in any crypto, please do your thorough research. The recent market crashes has sent a wake up call to us to do multiple research, multiple layers of research. In 2021, there were investors who just wanted to know the name of the cryptocurrencies. यहाँ invest कर दूं, वहाँ invest कर दूं. Shiba Inu was one example, and then
Dogecoin.
Dogecoin was another example, because they were investing just for the because they have seen the number of percentage of return, like 100%, 200%, 1,000% in just few months. But now it is the time that only 90%, only 10% cryptocurrencies will stay here for long. Otherwise, 90% will go down.
Right. And that's actually, that's great advice, I think, in life, that we should generally do our research before putting our money in anything. And so yeah, let's move to Anuj. What do you feel about the future of cryptocurrencies?
Yeah, like both the panelists are saying that there will be the future of the cryptocurrency. Invest wisely, and we hope for the positive regulation from in the taxation front, or I would say for the relaxation for the startup and all, for the Web3 and the cryptocurrency, so that the brain drain would not happen. And yes, we have, I would say strongly, we have like a future of the cryptocurrency.
Thank you. And Amanjot?
Yeah, in a single word, yes. It's been 4 years that I've been working in the industry, and there has been no single day I felt like, there's no future for cryptocurrency. And if you look at it,
you're still optimistic?
Yes, absolutely. It's going to be a slow curve now, because I don't think so the central banks are going to pump money. So it's going to be a slow upward curve towards all-time highs, like the next all-time high, whatever it is, I don't know. But going to be a slow recovery from here. I don't know where the market is going to bottom out. Nobody knows that. But what I can tell you is that whenever we enter the next bull run, it will be a slower one, because the future is going to be regulated, especially after the last 1 year of bankruptcies. Almost every jurisdiction is going to regulate crypto companies. But money is flowing in control. It's not like, they are raising billions and billions of dollars and they're betting with that kind of money, and they're betting with kind of users' money. So that's something which I think will not happen in the future. Probably we will see more bankruptcies having in a different possible way that will teach us more lessons about how to run the companies and how not to run companies. So yeah, it's going to be regulated, the future, definitely. I'll add one point to it. So if you look at it, Facebook renamed itself to Meta, and which is basically depicting metaverse. And if Facebook kind of company, which has a lot of R&D people and researchers, they have moved to this, then there is some substance to it. And what I can say is that, how can you imagine a metaverse operating, which is basically a digital verse, operating without a digital currency? You can't do it with a fiat currency.
Of course. True. Yeah. So just to kind of wrap things up, what we gather from the panelists is that don't lose heart. Cryptocurrencies are still relatively safe. Do your research, pick the right ones. Don't just put your money in something that sounds cool. Don't put more money than you're willing to lose. The value of cryptocurrency is likely to go up, albeit slower, but it will go up from here. What the government chooses to do is anyone's guess. We're all waiting for budget 2023 on Feb 1st to see what they do, if they do anything at all. And that, I think, is a great note for us to end this subscriber exclusive. Thank you so much for all of our viewers for joining us. Thank you so much to the panelists. It's been an absolutely fantastic discussion. Thank you.